From January 2026, under FRS 102, it is a requirement to recognise all leases on the balance sheet except for those of a low value and if they have less than 12 months left on the term. Creating all of the required accounting journals for leases that you used to simply enter directly to the profit and loss can be tricky. nettTracker has included the options to account for leases within its suite of tools available to help streamline month-end and year-end processes. During this session, we will create a new lease that commences within the current financial year, set up details of a lease that is halfway through the lease term, use the prepayment tools to monitor the deposit paid, use the accruals tools to create monthly adjustments for dilapidations provisions. So starting with the first example, an office is being leased. Before we start with nettTracker, we should have as much information to hand as we can for the lease. How much is the asset worth? If the business purchased the leasehold, what would be the current market rate? What costs were involved at the start? As an example, did the office require substantial repairs or decoration before moving in? Were there arrangement fees or legal costs for the lease? Did the company receive any type of incentive or commission on commencement of the lease? What will the asset be worth at the end of the lease? For a building, we'll leave with no change, but vehicles, plant and machinery are likely to be worth significantly less at the end of a lease. When does the lease commence? When do the payments commence? How frequently are those payments made? Let's enter those known values into nettTracker. However, before we create the lease, we must have an asset group in place. So first of all, we'll go to Settings and select Asset Register. We'll create a new asset group called Right of Use Assets, Land and Buildings. We'll select a default depreciation rule. However, the lease will override how the right of use asset connected to the lease will be depreciated. I'm going to select the additions and disposals are posted to the same balance sheet accounts, which makes this setup a little quicker. If we already have accounts set up in our accounting software, we can choose to map them here. If not, nettTracker can create all of the required chart of account codes for you, and that's the option that I'm going to select. We can then save. With the asset group in place, let's now create the lease. From the left-hand menus within Loans, we select New Lease. Using the information we know about the lease, we will complete all of the required details. Starting within Name and Reference. Here, we'll just add the name. You can add further details, but it's not mandatory. Within the Lease Details section, first we add the asset value. So this would be the cost of this asset if we had purchased it. For example, the list price of a car or the freehold leasehold cost of a building. So here we'll add what the building would be worth. If we simply entered the total value of all of the lease payments, as an example, 36,000 repaid at 1,000 over 36 months, if all of the other fields were left empty, nettTracker would calculate an interest rate of 0 because it would equate to an interest-free loan provided of 36,000 and 36,000 repaid. In this example, the property value is 500,000. The prepayment amount. Now this must not include any refundable deposit which needs to be held elsewhere on the balance sheet. This should include non-refundable deposits and repairs maintenance costs that might have been required to refurbish the asset prior to being able to use it. Within arrangement fees, we can include the total value of legal and professional costs, for example, solicitors' fees to prepare the lease. Not so common with land and buildings, but if any commission was received back into the business as a result of the lease being put into place, those values should be added here. It's important that any value that relates to the prepayment, the upfront costs, arrangement fees, or incentives are all coded directly to the lease liability account that will be mapped to this lease. They will all contribute to the calculation of the lease liability and the right of use asset value. Within the residual value for the property, we will leave the closing value to be the same. The last four entries here reflect the expected payments moving forward. The repayment amount reflects what is paid in each period. The number of repayments reflects the number of months or quarters or years. In this example, it is a 5-year lease being paid quarterly, so 20 payments in total. The payment interval is therefore quarterly. The payment timing, being either in advance or in arrears, reflects the impact of cash flow within the business and affects how the interest rate will be calculated. This being the implicit rate calculated based on the known asset values and payments made. At the time of recording, we are also working on a reversal of this method. So instead of using values to calculate the implicit rate, we would enter an incremental borrowing rate which will calculate the asset value, useful when the market value of the asset is not known. Within dates, we enter the date the lease was signed. We enter when the lease payments start. The end date is calculated from the number of payments. We enter when the postings should start, and this is important when introducing an existing lease, as we do not want to enter journals into previous years. Within asset membership, we select which asset group our right of use asset should be associated with. We created a group earlier and can select the required group from the drop-down. Within our posting accounts, we select the profit and loss category that is being used for interest charges, and then the lease account that will be held on the balance sheet. If a lease account is not yet in place, nettTracker can create a new nominal account for you. It is advisable to have one created first and ensure that all of the associated costs, as mentioned previously, have been recorded against it. Finally, you can select additional location and tracking categories if required. With all of the fields completed, we select to save. Next, we look at the impact of the statement for leases. From the left-hand menu, below Loans, we select Statement. From the drop-down, ensure that Lease is selected. Within the statement, we can see the name of the lease, the implicit rate that has been calculated based on the values entered, the lease date, the payment value, the balance at the start of the report period, any interest that has been marked as posted, the value of expected repayments during the report period, the closing balance, what is due in 12 months and what is due after 12 months. We can view further details of the lease by ticking the box to the left of the lease, clicking on the Tools icon and then selecting View. On the left of the screen, we can see all of the information that relates to the lease, all the details we entered when it was set up. We can also see the value of the right of use asset calculated. The difference between this and the lease relates to payments like refurbishment costs and legal fees already paid. We can see the details of the related asset, which we'll come back to later. The implicit rate is calculated, and we can see when the lease was created and by who. On the right, we have a schedule of expected payments, principal postings, and interest for each period. We'll start with the repayments. The dates here are not specifically the date the payment is made, but the date for the end of the period in which it is made. When the lease was set up, we stated that payments were being made quarterly and in advance, with the first payment in February. This means that April will be the last month in the quarter. If we move to the principal postings, this will include the introduction of the right of use asset. At this point, the posted status is no. nettTracker will create all of the required journal entries when connected to accounting software. It will only do this once a period end has been processed. We'll do that now just to view the impact. From the left-hand menus, we select period end. We choose the month to process up to and then select run. We can see the status of the journal for the right of use asset is now marked as posted, and where appropriate, the journal entries will be created in our accounting software. Finally, in this area, if we look at our interest postings, we can see the fact that there is no interest for the first quarter. This is because the first payment is being made in advance before any interest would accrue. With the periods processed to include at least one period of interest updated, let's look back at the statement. When you view the statement, in fact any report in nettTracker, the period will default to the current financial year. Simply clicking on the pencil, we can change the reporting date range. With the periods processed and the required date selected, we can see the values of payments made and interest charged to date. Now that we've looked at the lease, let's take a look at the right of use asset. From the left-hand menus below Assets, we select Asset Register. From the drop-down filter within the Asset Register, we select the required asset group, which in this example is right of use assets, land and buildings. Here, we can select the asset created, and like the lease, if we tick the box, select the tools icon and view details, we can see on the left when the asset was acquired and the depreciation start date, the depreciation rule applied, which reflects the length of the lease, the original value of the asset, the current net book value of the asset. On the right, we can see the schedule of depreciation against the asset. Being straight line over the term of the lease, there is an equal charge every month. We can see the months that have been processed as they are marked as closed with links to the journal that has been created. Before we look at the entries that have been made so far in the accounting software, let's take a look at the dashboard, which we can access from the option at the top left-hand menus. If you've recently created entries in either nettTracker or your accounting software, it's a good idea to use the Refresh Dashboard option to ensure all of the values are updated. As we scroll down the dashboard, we can see the balance per the asset register agrees to the balance in our accounting software, and the same applies to our lease liability balance. Now, with our accounting software open and the balance sheet in view, we can see values for the right of use asset and associated depreciation, and within our liabilities we can see the present value of the lease. If we look at the detailed transactions recorded against the lease, we can see the costs incurred before the lease commenced, the refurbishment costs and legal costs. We can see the journal created by nettTracker to reflect the lease liability, repayments that have been made to date, and we can see the interest that has been adjusted. Before we look at setting up an existing lease that is partway through its term, let's consider other accounting entries that could be associated with the lease. These could be a refundable payment that is being held as a security deposit, possible dilapidations provisions required that might be payable at the end of the lease. The first would require a prepayment and the second requires accruals. We can monitor both of these in nettTracker. Within settings, we select accruals and prepayments and choose to create a new group. We give the group a name. We select the account type this relates to. We can add further notes, but it's not mandatory. And we select the balance sheet account the group should be mapped to. Or we can allow nettTracker to create one for us. Here, I've created a group for prepayments. And I'll repeat for accrued costs. Before we start creating adjustments, the options at the top of the accruals prepayment settings reflect how the adjustments will be made. Either straight line over reporting periods or daily being the number of days between periods. As an example, we may wish to provide for dilapidations provisions of $20,000, being the expected cost to put the building back into the condition that it was at the start of the lease. We can start making provisions over the next 60 months. From the menus on the left-hand side, we can select New Item. We select the group, which will be accrued costs. We give the provision a name and can add further notes, but it's not mandatory. We select the account in the profit and loss that it should be adjusted to every month. We select the total to be accrued, over how many months, when the adjustments will start. If we know when costs will be incurred, we can add a date here, but that's unlikely, so we'll leave it blank. We've not made any provisions yet, so the value already in the balance sheet is nil. We can add additional tracking options if applicable and then save. To view the accrual item we've created, we need to view the statement, which we can do by selecting the option from the menu on the left. At this point, there is no processing that has been made to impact the accrual, and it's in pending. To make any adjustments, which can be retrospective, we select the period end option and process again to the previous month end. Going back to the statement for the accrual, we can see how the accrual was named, the original accrual being what we expected to originally accrue, how much has been accrued to date, how much more is expected to be accrued, how much of the accrual has been released to the profit and loss, the date the accrual commenced, when the accrual is expected to complete, and the current balance of the accrual. By ticking the accrual and selecting the tools icon, there are options to edit, release, increase, and delete the accrual if created in error. If we select a view, we can see details of how the accrual was originally created. We can also see a schedule of the expected provisions to be made over the coming months and years. The same values would appear within projections. It's very common that when a business leases a building that a refundable security deposit is paid at the time the lease is agreed and signed. Because the deposit is refundable, this doesn't affect the right of use asset, but it will appear elsewhere within the balance sheet. This could be within prepayments or similar. Where a prepayment group has been created in nettTracker and is connected to accounting software, the transactions posted to the prepayment account can be detected. With nettTracker fully refreshed, we can see there is a transaction within the pending area of prepayments. From here, we create our prepayment for the lease. If you have an existing prepayment in your accounting software carried forward from a previous financial year, you can create manually or you can import using an Excel file. We will use the transaction description for the name, which we could change if we wished. Generally, prepayments are adjusted to profit and loss accounts, but it could be any account we choose. The prepayment value and date will be left as per the transaction. Because the prepayment will be held as security deposit and not amortized over a selected period, we will select the option to hold until reversed. This transaction was detected from the balance sheet account for prepayments, so we will leave the tick in place and then save the entry. If we return to the statements area for accruals and prepayments and select the prepaid costs from the drop-down menu, we can see the prepaid value and the status of holding. Let's now go to the dashboard. So far, we've created a right of use asset, which agrees to the value in our accounting software, accruals for dilapidations, and a prepayment for the deposit, again agreeing to the balance sheet, a lease which also agrees to the liability in the balance sheet. Earlier, we created a new lease that commenced in the current financial year. But what happens when we need to account for an existing lease? In those instances, we need to reflect the present value of the asset and the lease in the accounts and make adjustments to the retained earnings. Let me show you how we can work through that as an example. We are going to use the exact same values as we did before, but this time for a lease that was put into place 2.5 years ago. So with date starting from July 2023. So we have the asset value, what costs were involved at the start, any arrangement fees, any commission or incentive received, the value at the end of the lease, when the lease commences, and when the payments commence. As we enter all of the information, one of the most important dates here is the date from which you start processing. We don't want to make any adjustments to the previous year, so we'll select the start of the current financial year being the 1st of January 2026. We want to introduce the lease and right of use asset with the present values. If we take a look at the statement for the lease, which we can see the item that I've just created, by clicking the lease and choosing to view details, we can see all of the entries calculated from 2023 up to the end of 2025, and they are marked as posted. In this instance, it is just for internal purposes to calculate the lease balance. Currently, for the right of use asset, we will need to make a manual adjustment to bring the asset value in line. To do this, we first view the details of the asset. The asset has been created using the same values as example 1, but with no depreciation posted. We can see there are only 30 monthly postings from January 2026, which is correct. However, the asset would normally be written down over 60 months. The monthly adjustment from 2023 should be £2,083.83 every single month. This value multiplied by 30 months gives us an adjustment of £62,514.90 required. Using the tools icon to the top of our adjustments list, we can create a depreciation adjustment. We enter the date, being the last date of the prior year, and the total amount to adjust, a positive value to increase depreciation. We will mark this as closed as we do not want nettTracker to create a journal from this entry. We can see that the right of use asset value has been updated and the monthly depreciation is correct moving forward. In this example, we'll need to create a couple of manual adjustments to bring our accounts in line. We'll need to debit retained earnings and credit the lease liability, credit retained earnings and debit the right of use asset, and debit retained earnings and credit the provision for the depreciation against the right of use asset. It's important to note that this adjustment is not required to restate the profit and loss in any way, but it is a balance sheet adjustment affecting the assets, liabilities and retained earnings. After adding the lease, entering the journal against retained earnings and processing all months to date, if we look at the dashboard, we can see it reflects the fact an additional lease has been added and it balances back to our balance sheet. Moving forward, each month the necessary adjustments will be made to ensure that the balance sheet continues to reflect the present value of the lease and right of use asset. In this session, we have covered how to create a new lease and right of use asset in the current financial year, create an accrual for possible dilapidations costs, create a prepayment to reflect the refundable deposit paid on the lease, and to introduce an existing lease and right of use asset into the balance sheet.